And then, as it usually tends to happen, our Wednesday was followed by a Thursday. So on November 3rd, bonds lost ground at a relatively quick pace overnight, with most of the losses happening during the European hours. Much of the EU weakness is said to be a sympathy, or basically trading with the US bond losses following hawkish comments from Fed Chair Powell. But there were also hawkish comments from the ECB President Lagarde, who said that a recession won't be sufficient to tame inflation. Also today, Bank of England raised its key interest rate by 0.75 of a point to 3%. The UMBS was down 34 basis points on the start of the day and pretty much stayed around that range for the rest of the day. They were down more earlier, but stocks were down 54 points on the open. Jobless claims came in at 217,000 versus an expectation of 220,000, and it was 218,000 previous. So job losses are staying very strong and staying very consistent. Unit labor cost came in at 3.5 versus 4.1 forecast. It was 8.9 previous, so that's quite a bit of a drop. Challenger announced job cuts came in at 33,800 versus 29,900 last time. ISM services came in at 54.4 on a 55.5 forecast. It expanded, though not as much as September. Prices came in at higher than expected at 70.7, and employment came in at 49.1 versus 53 previously. The markets are still digesting the Fed messages from yesterday. Everybody's getting a different read on it. The statement included language about the Fed taking into account lags and past rate hikes in order to assess the further course of monetary policy. In the immediate aftermath, stocks and bonds rallied on the statement, as it seemed to indicate that the Fed was opening up the possibility of a pause in rate hikes. Then the press conference turned sour on them, as Powell said it's very premature to think about pausing and that we have a ways to go on rates. Stocks and bonds sold off the rest of the day yesterday, and in this morning they were doing the same. About the only positive that came from Powell's message was he signaled that there's further rate hikes could be smaller. Like we've talked about previously, a lot of people are forecasting 50 basis points in December and then quarter hikes thereafter. Between now and December, we should get two readings of the Consumer Price Index and the PCE Price Index, which is the Fed favorite. Like I said, on the day, we ended up being down 30 basis points on the MBS, with Ginnie Mae's faring about the same or a little better depending on the coupon. We are right in the middle of that fat range at 98.929 and 96.891, so that should really help things out to make things nice and bouncy. We also got a post from our sponsor at WellThatMakesSense.com. So if you wish to change another's behavior, you must first change some existing feature of that person so that it fits with their behavior. It can be a state of mind or it can be something in their physical environment. Persuasion, the book that we're talking about here, is all about setting up situations so that people are more persuasive or more influential before you actually seek to influence them.